Assets ranked by what actually makes you money. You want to know what you can buy or what you can invest in that will actually make you money. There's so many different types of investments. Everyone's trying to tell you invest, 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 but I'm going to break down what actually makes you money. Some of these things will surprise you, but I'm going to give you a 5-star list so you know what's some of the best investments, what's some of the worst investments, and even some things in between. Noelle Randall is a multi-million-dollar real estate entrepreneur, so I know about investments, even some bad ones.
Oh my God! Wow!
I'm going to share all the secrets. Let's go.
Noelle. Yeah, she can fix that. You gotta get it done, no, you need to do it better. Well, she can fix that. Yeah, she can fix that. Investment to get back, trying to get a big stack. She can fix that. Let's fix that.
So let's get right into it. I want to break down the most common investments, like the things that most people already know about, not new, crazy, different things, but what most people already know about based on data, based on statistics, and based on actual returns. So I'm going to rank these investments from 5-star to 1-star, and we're going to start with a 1-star investment. Gambling. Gambling is a 1-star investment. So even like lottery tickets. But the crazy part about it is on average, Americans are spending at least $1,000 annually on lottery tickets, on gambling, on betting sites, on average, like everyone. So this is a lot of money that could have been invested in something else. But the crazy part about it is we know that the odds of winning are so low. In fact, it comes out to like 1 in 300 million when you combine all of what the odds are. But yet we still keep putting money into this. We still keep acting like this is something that we should do. But this is an absolute loser. Like once you gamble and you start putting that in, that's not an investment. It's actually just going to cost you money and it just burns through. Most people do not make any money off gambling. Lottery winners are not among the most richest people in the world. When you actually look at even the top 1%, most lottery winners don't even make it in. They get that money and they lose that money. It's not a great investment. So putting aside a little bit of money, even just a little bit of money a week to buy lottery tickets and scratch off tickets is a terrible investment. It is definitely a 1-star. Number 2, luxury and status goods. Luxury goods do sometimes go up in value. Like if you buy a Chanel purse or if you buy a Hermes this and these types of purses, even some types of shoes and belts and some fashion, even collectibles like watches and different sports cars. These can in some cases make you some money, but they are considered a 1-star investment. When you look at the data of how many sports cars and collectibles and status items go down in value, even when you keep them a very long time, the returns are not even that great. Even if you kept a Chanel bag and you paid $5,000 for it, and then 7 years later you sold it for $6,000. When you actually look at the numbers, most likely it may have retained its value, but actually going up in value is very, very unlikely. And most status items, most luxury goods do not increase in value over time. Some of them do maintain their value. Some of them do are sometimes like limited items, for example. They do have that ability to sometimes be something that can pay off really well, where you have this type of purse or that is really, they only made a few of them and you kept it for 20 years. Again, that is not a great investment. It sometimes works out, but it is definitely 1-star because most people pour lots of money into Gucci and Fendi and Chanel and all of these really high-end brands. And Noelle Randall did participate in some of that, but it is an awful investment. It's definitely 1-star. Most of it does not pan out. It is definitely in the 1-star category. So now that we've talked about that 1-star stuff, that stuff that is draining wealth, the stuff that has no leverage, no cash flow, none of those things. When you actually think about those first 2 things that I said, no growth, no leverage, no scalability, those things are not going to lead to wealth, and those are not great assets. That is why they are 1-star. Now let's talk about some 2-star assets where they're better than those 1-star, but they still don't have much of growth, much cash flow, much scalability, all of those types of things. Number 3, commodities. Commodities is our first 2-star rated investment or asset. Commodities like gold, commodities like silver. These are things that you can actually buy, tangible things that sometimes do help against inflation. So a lot of times when the market is going crazy and the economy is in peril, people will say, you should buy gold and keep it. And that is something that you definitely can do. And in many cases, it can work out where it is at least a hedge against inflation because it does go up in value over time. But let me give you some statistics about gold. Gold as a long-term investment produces less than 8% annually. It's somewhere between 5 and 10% when you look at a 30-year average of gold prices. Therefore, it is not terrible. It will sometimes make you money. The problem with gold and silver and commodities in general is they are very fragile. As markets go up and down, their value goes up and down. Another major problem with commodities is liquidity. When it is time to sell the gold or silver, it is not easy to sell. Yes, there are some brokers, but it is not something where people are lining up or there's this big market to buy gold or silver from people. Therefore, most of the brokers that are actually selling gold are selling gold to people to keep. When it is time for you to liquidate your gold, you're going to run into some issues where you're having some problems with what it's worth at that time. Because again, very fragile market, very volatile market, and a big problem with liquidity. Additionally, the problem with commodities is there is no cash flow. So you're holding the gold, it's fine. You may have a piece of gold, you have it in your safe or whatever, but it is not bringing you in any money anytime soon. If you can't cash flow it, no one's borrowing against it to like give you money every single month. So there's absolutely no cash flow, and the returns over 5 and 10 years are going to be very disappointing. Number 4, a single residential rental. So many people want to be landlords and they start off with one rental property and they think that this is great. And of course, you have to start somewhere. Noelle Randall already told you, I am a real estate multimillionaire. I am an entrepreneur in real estate. I absolutely love it. And I tell people every single day, you should get rental properties. I never say you should get a rental property. Having one rental property is not a business. It is a headache. And in most cases, you are going to lose money. Yes, I know I'm always here talking about buy real estate and I have those millionaire secrets, but I do not tell you to buy one rental property. That is insanity. It would be like Walmart having a store and it had one aisle with one item on it. You're going to lose. So the problem with a single rental property is you're going to have occupancy issues. If you have this one rental property and someone moves out or doesn't pay the rent, well, then you have absolutely no income whatsoever. Additionally, it is a piece of real estate. There are maintenance costs, there are taxes, there are HVAC, there are insurance, there are a lot of expenses that goes with real estate. So if you are a mom and pop real estate owner, statistically speaking, you are losing money. Having one rental property is more of a headache than it usually is as an investment. And in fact, mom and pop landlords, people that have one rental property and they manage it themselves, they are the highest default of all mortgage loans. Those people almost always lose money and they default the highest of anyone else. One rental property is usually what you hear people talk about when they talk about real estate because they're not truly a real estate entrepreneur or truly a real estate investor. Having one rental property does not make you a real estate investor. Again, Noelle Randall loves you so much. It's a great place to start. You have to start at least with one, but if you stop and stay at one, you're probably going to lose. That's why this is a 2-star investment. Yes, you have the piece of property. It does have some cash flow if it's done properly. It does usually go up in value over time. But again, having one property is very volatile. And so in most cases, you are going to lose money. You're not going to make nearly as much money as you think. It is not, you have to scale. When it comes to real estate, if you want to make money, you have to scale. You have to get up to 5 or 10 properties. But that one rental property and having that as an asset is not usually an asset at all. It's usually something that costs you money each month. So those are your So commodities and one rental property are your 2-star investments. Yes, they have some value. Yes, they can go up in value over time. Yes, some people can get lucky with owning a little bit of gold and owning one rental property, but in most cases, it doesn't work out, and those are your 2-star assets. Now let's get into your 3-star assets. So these are right in the middle. It's not 4 stars or 5 stars where you are having a great time and you are living in luxury and really raking it in, but these are solid average assets. So let's talk about the first one. Treasury bonds. Treasury bonds are an amazing investment, but it is very, very lackluster when you look at the wealth that it builds over time. Most of your billionaires and all of these other people did not get so by just investing in treasury bonds. Treasury bonds are for stability. They are a great investment for an investor that just wants some stability because they know that I've invested in the United States government and one of their projects. The interest and the return is pretty much guaranteed. But let's talk about what those guarantees have been. Over the past 30 years, United States Treasury bonds have yielded a return of about 5% with a 10-year Treasury bond. So again, the money was unavailable to you for 10 years, and over those 10 years, it was about 5% annually. As you know, the average stock market has been about 8%. So in fact, it's performing less than the average S&P index and different funds like that are just safe and you don't necessarily have to do anything. Stability is a great thing, though, for U.S. Treasury bonds. For the most part, that money is guaranteed. It's not really going to go default. The United States government usually hasn't defaulted. Most people haven't really lost money on it. But at the same time, it has just been pretty mid. Number 6. REITs. When you're invested in a REIT, you're not like a single rental landlord. You know, the single rental landlord has to deal with all of the maintenance, the tenants, different things like that. At least when you invest in a trust, you have the management and all those other things handled by someone else. So it is better. That's why I'm considering this a 3-star investment. And when you look at the returns on REITs, they have been mixed. Because real estate can be very, very volatile, the problem with REITs is that they are very, very sensitive to interest rates. So back in 2022, when interest rates spiked, REITs lost about 25% of their value. It was crazy how much of their value is dependent on the interest rates for the mortgages. And I totally get that. And that is why it's a 3-star investment. It's decent and great, and many great economies. You can invest in a REIT and do very, very well. But again, it can be very, very, very volatile. And as interest rates on mortgages go up, that could be a real, real big problem for making money with a REIT. The great thing about REITs, though, is they usually pay dividends. And so, because they pay dividends, this works really well for income-focused investors. So an investor that wants some income from those dividends, this is something that they usually invest in because, like I said, with real estate, there usually is a cash flow component to the real estate. So it is able to at least create some dividends for investors. But again, it can be very, very sensitive. Like in 2022, you can be invested in a REIT and get no dividends at all that year. So it really does depend. That's why I said over time, it's a decent investment. It's not creating a whole bunch of wealth. This is not what most millionaires do to become wealthy. It's a kind of safe investment for the most part. You can put your money into a REIT. It's going to do okay. It'll get you on average, again, around 8 to 10% returns, pretty similar to an S&P index. But some of the returns that are discussed and offered, 18%, 22%, most REITs have failed to produce those types of returns. And additionally, as I said, it can be very, very volatile depending on the interest rate market. Number 7, art. So art can be a great investment if you know what you're doing. So when I said collectibles and luxury and status items, if you are someone, though, that is an art collector, this could be basically a 3-star investment if you know what you are doing. So if you have a Rembrandt or you have, some amazing Van Gogh painting, for example, most likely that will retain its value year after year after year. In most cases, you will not lose money on specific art, especially if you know what you're doing in the art world. Most people that own art, their portfolio looks like to be that it's performing very well. However, this is considered a 3-star investment because for the most part, this is a very eccentric market, very, very illiquid. So if you wanted to get rid of these paintings, you do not have a lot of buyers for it. If you have all this expensive artwork, sculptures and different art that is very, very valuable, you also don't have a lot of buyers. So it's not really something that is liquid. So you may have these great pieces of art. They may be worth a lot of money, but the ability to get rid of them and sell them so that you can actually receive the money could take years, 5 years in cases, finding a buyer for a specific painting where you actually make some money. So art, I consider a 3-star investment. Most people don't have the expertise, but if you do have the expertise to invest in art and keep those as assets, it probably will not lose you money, but it's not going to offer you cash flow. For the most part, it can go up in value. Quite frankly, we have seen pieces of art go all the way down to all the way up, and you can make a lot of money, but you're going to have the expertise, or have to have someone that has the expertise to help you buy these assets. Additionally, you're not going to get any cash flow for them, and it's also going to be very hard to sell when you go to sell them, because the buyers in the marketplace for art is much smaller than other assets like real estate. Now, those were your 3-star investments: treasury bonds, REITs, and art. Again, not going to lose you a lot of money in most cases. You're not going to usually lose on those types of investments, but also not going to make you wealthy. Not usually what the wealthy do to get rich or make a lot of money or bring them in lots of money each year. So again, they're 3-star, definitely not bad, definitely something you can invest in, but these aren't going to be the winners that really bring a lot of wealth. Let's start getting into those 4 and 5-star, where you really start making some money off of these assets. Number 8, index funds. Index funds are going to be your first 4-star investment. This is going to be almost the best. Index funds, when you invest in the S&P 500, you can buy an index fund, and statistically speaking, they have performed. On average, the S&P 500, a normal index fund, on average has returned about 10% annually every single year. Okay, when you look at the graph, and again, there's some figures that were 12%, some that were 9 or 8, but on average, it has been 10% annually. And this is a very solid investment that most investors know and invest in very heavily. It doesn't have any management by you. You don't have to do anything. You're not paying excessive fees like in a private equity type of situation. So it usually is a great investment that many people take advantage for solid income, decent dividends, and a way to actually grow wealth over time. If you invested $100,000 into a normal S&P index fund, you would assume that you're going to get some dividends, and it would equal out to about $3,000 to $4,000 per year, okay? 3 to 4%. You could reinvest those dividends, and here is what actually has happened if you actually just keep reinvesting and you stay invested. Let me share with you a quick example. Let's go back to 1980. If you had invested $10,000 into a standard S&P index fund, today that $10,000 would be worth over $900,000. That's a great investment. So yes, 1980 was not like last year or anything like that, but just think about leaving that money in there where you're not having to manage it. You're not having to deal with tenants or maintenance, or, it's not gambling. It actually is just a solid investment. And just to think, if you had invested that in 1980 and still had that to today, you would have over $900,000. This is a top tier 4-star investment, S&P index fund. Number 9, real estate portfolio. So yes, unlike the single rental property, having a portfolio of rental properties, 5 to 10 properties, is actually going to be considered a 4-star investment. Once you have more properties and more real estate, the numbers really do change. Real estate is something that you have to scale because there is so much risk in just owning one property, and there are so many expenses, and things could change due to occupancy or vacancy in your properties. But once you have more properties, you are less affected by vacancy issues. You are less affected with maintenance issues and different things of that nature, because you have other properties in your portfolio that are actually making money. Additionally, the real estate itself has value that you can leverage to gain even more properties. So having one rental property doesn't give you much leverage. You could only borrow against that one property. But if you have 10 properties, you actually could borrow against 10 of them and get 20 to 40 properties really, really easily. It is very easy to leverage the equity in real estate to scale the business. Now, when it comes to a real estate portfolio, property management is going to be very important. Having good property managers who do the maintenance on the property, keep the property well maintained, to keep the value of those properties growing. Real estate already has built into it a great amount of appreciation. Year over year, real estate is appreciating at a decent level. In some areas, it's 5%. In some areas of the country, it's more than 10% annual appreciation. So if you're buying rental properties and you have a portfolio with even 5 to 10 properties, you have completely changed the scenario and reduced the risk by increasing the upside of the real estate. As a multi-million dollar real estate entrepreneur, I can tell you unequivocally it requires scale when it comes to real estate. If you stay small in real estate, you stay risky. The more rental properties you actually have, the more stable you are. The more stable the income, the more stable the banking situation, the more stable the investment itself. The more it actually grows and becomes scalable, the more leverage you create, the more cash flow you create, the more equity you create, the more appreciation. It just grows and grows. So having a real estate portfolio is considered a 4-star investment, and it can be an amazing way to actually grow wealth. And in fact, most millionaires have been created so through real estate. Now, those were the 4-star assets. So again, real estate was not the 5-star. As a real estate entrepreneur, I would have loved to tell you that it is the top of the top, but I'm about to tell you the top of the top investments that you can have. These are the 5-star investments that boost cash flow, create billionaires, in fact, and really show how you can put your money to work. These assets really make you some money. All right, let me tell you these. Private equity funds. Investing in a private equity fund can make you a lot of money. Private equity funds actually buy up businesses and investments or different companies. For example, a private equity fund may buy all of the funeral homes in Ohio, or they may buy all of the hospitals in the Chicago area. So a private equity fund has a very specific thing that it invests in, that they have expertise on, and they actually use their expertise and their money to buy things at a discount and increase its value so that they can return those monies to their investors. Companies like Bain Capital have said that they are creating 12 to 15% annual returns from their private equity, and so are so many other private equity firms. But here is the catch. Private equity makes a lot of money for a lot of rich people. The problem is most people cannot get into private equity or private equity funds because it's usually involved with people that you know. Again, private equity funds have been offering returns of 12 to 15% annually, but most people don't even have access to private equity funds. For the most part, you actually have to be an accredited investor. You actually have to invest a minimum of $250,000, and you have to let the money stay with the private equity firm for 7 to 10 years. So you can make a ton of money, but you usually have to have some money to get started. And you also have to have the network or the relationship to actually even invest in some of these private equity firms, because they don't just take clients off of the street. They usually want to know someone who referred you to that company, or it's a certain division of that private equity firm and you know someone and they tell you about the investments. You don't hear about these things on Craigslist. There's no commercials on television or during the Super Bowl that, hey, you can invest in Bain Capital. So being able to invest in a private equity fund is usually something that people have a hard time getting into. But if you have the $250,000 and you're able to leave the money there for 7 to 10 years, you can make a ton of money. Private equity funds on average will be considered a 5-star investment, and they have made a ton of money for a lot of rich people. Number 11, franchises. Franchises are an amazing 5-star investment for the most part because it is a proven and successful business that is giving you a proven and successful track record and path on how to make money with that business. So franchises like Chick-fil-A, McDonald's, Dunkin' Donuts, or just Dunkin' now, make a lot of money for their franchisees. In many cases, they invest in them and they are returning on average $80,000, $100,000 per year every single year. The only problem with franchises is that they can be very, very hard to get. If you want a really good franchise like a Chick-fil-A, you probably are not getting it. If you want a franchise like a McDonald's, there is a really long list. The company, the corporation has to actually approve you. You have to have a certain financial status. You have to have a certain amount of stability. And the amount to get started is usually more than $100,000. So even if they gave you and approved you, you need your own $100,000. And that's usually just going to be the buy-in, the franchise fee. And in cases like McDonald's, it's even more than that, just the franchise fee. And then all of the build-out costs would be on you. However, it is considered a 5-star investment because for the most part, it's a proven business. Most Chick-fil-A's don't fail. Most McDonald's don't fail. Most Dunkin' Donuts just don't fail. Again, you have this proven system with this proven company behind you that has been around for many, many years, giving you almost a turnkey business that you get to run and have annual returns every single year. So most people that have these franchises are wealthy. They do get great returns on their investment. They rarely have lost money on that investment. So if you invested to get a Chick-fil-A, say you invested $100,000, just using round numbers, most likely you are going to be able to recoup that money within the first few years, and then it's going to be very profitable for you year after year after year. However, like getting the Chick-fil-A, that may be the obstacle that you're not able to get past. Number 12, commercial real estate. Commercial real estate is going to be the pinnacle 5-star investment. According to CBRE, which is the number one commercial real estate owner and property manager, commercial real estate is providing about a 9% annual return on investment annually. That is definitely pretty good. So let's talk about commercial real estate. Not talking about even a portfolio of single family residents, like I said, with the 4-star investment. I am talking about shopping malls. I am talking about hotels. I'm talking about office buildings. I am talking about multi-family apartment buildings. You have seen so many great multi-family apartment buildings, 100 units, luxury ones that make a decent amount of money for their investors. This is an amazing 5-star investment. This is why most people will invest in a REIT, which of course is a 3-star investment, because they get to own a piece of these pieces of real estate without it being all having to have all the responsibility of managing or dealing with it. So owning commercial real estate and investing in commercial real estate is actually a very good investment, and for the most part does give you a great return when you look at the data. It is definitely, though, something that you can't usually own without already being rich. Think about it. Your average commercial real estate, even just a small building, is going to be $1 to $5 million, and you are going to need to put down 20% of your own money in order to get in. So even like I said, if it was just $1 million, 20% would be $200,000. I already talked about if you invested $100,000 into something. So if we're talking about just investing $100,000, that doesn't even get you in the door with any of our 5-star rated assets, such as investing in the private equity fund. Again, the minimum for most of these funds are $250,000. So $100,000 doesn't even get you in the door. Franchises, most of your high-ranked, great franchises that are really going to bring you those returns, like the Chick-fil-A's and the McDonald's and the Dunkin' Donuts, their franchise buy-in fees are more than $100,000. So $100,000 doesn't get you into that 5-star asset. And the commercial real estate, $100,000 is pennies. That's only going to get you at best a $500,000 piece of commercial real estate, using the amount that you have to put down 20%. And that doesn't even include amount that you would need for reserves and in case something happens to the property in the meantime. So if you just had $100,000 and you bought a $500,000 piece of commercial property, well, then you actually have no reserves. And so that could be problematic as owning that asset is for you. So these are definitely 5-star investments because they make a lot of money. They've created a lot of wealth. But what you will see with the 5-star investments is most of them already require you to be rich. So usually you may have to start with a 3-star investment and work your way up. Let's just stay away from the 1-star investments altogether, because we've already realized they're not actually investments. They're not going to bring you any cash flow. Most of the time you will lose money. They just burn through cash, and it's just a waste. So now let's talk about the last one. I've given you the 5 stars. You know what they are. But now let me give you a 6-star. Owning your own business. This is going to be the 6-star because this is also something that doesn't work out for most people, but when it does, it works. More than 70% of all millionaires are millionaires because they own their own business. They're entrepreneurs. So I strongly suggest you own your own business too. I have a book that can help you do that called Pick a Horse. Combine that with my journal and you could really help yourself get to that next level. Go to deals.noellerandall.com to get my book and my journal absolutely free. You just cover the shipping. Because we know that most millionaires are entrepreneurs, I strongly suggest you become an entrepreneur and own your own business. Yes, sometimes it is very risky, but the returns and the rewards have been amazing. If you have a successful business, especially you do a startup, for example, and you invest your time and your energy and you do it, in many cases, you can become a millionaire and you own the business. You could even sell the business and walk away with millions of dollars. This is a great opportunity opportunity, and it does have some risk, but the risk is mostly you. One of the things that I strongly suggest is start reading and start working towards your business. Pick a Horse is my journey on how I became an entrepreneur and how I decided that real estate was going to be the thing that I did. But please know that I have met millionaires from all different walks of life that have all different types of industries. People that sell rocks to people that coach people on how to do sexual acts. Literally, you can become a millionaire with any different type of business. I say that very seriously because whatever your passion is, you can turn that into power and you can turn that into a lot of money for yourself. Go to deals.noellerandall.com, get my book, Amazon bestseller, Pick a Horse, and the manifest journal that will help you actually manifest this by journaling in the morning and the evening towards your most important goal. This journal is a culmination of so many journals that I have used over the years that have helped me be successful and become the real estate multimillionaire that I am today. You do not have to invest in real estate to become a millionaire. Most millionaires are millionaires by owning their own business, whether it be real estate or non-real estate businesses. So you need to pick your horse in your business and take yourself to that next level. Just go to deals.noellerandall.com and I will ship those 2 books out to you. You just cover the shipping. Now that you know which assets actually make you money, you can see very clearly it's most likely inside of you, and that might be your best investment altogether. So get my books at deals.noellerandall.com. Please know that Noelle Randall used to be broke, bankrupt, and living in her parents' basement, and today I'm a multimillionaire. You can invest, and more importantly, you can invest in yourself, and books are an amazing way to help you get there. Get these 2 books today because I want to make sure that you have all of the knowledge, all of the tools, and all of the resources that you need to be successful. This is Noelle Randall. To your success. All right, go ahead and subscribe to this channel. Please thumbs up this video. It really does help. And more importantly, tell me your thoughts in the comments. I read all of them and I will comment back. I want to know what you think about these assets because it truly is important. Comment below. Let's have a conversation about this one.